demonetization was talked as a big negative event in our country by many people, while it looks like for some of them it's been a big bonanza. Post demonetization, Indians took to stock market investing in a big way as other avenues of investing started giving them lesser growth potential. The growth in new demat account opened in India had a significant jump since 2017 onwards. During COVID times, it had even bigger growth. India had about 20 million demat accounts in 2012. It went on to become 28 million by 2017, and from there on it almost doubled to become 53 million accounts by 2021. From 2012 to 2017, the first 5 years of the last 10 years, we had 40% growth in new accounts. The next 5 years saw near 100% growth. So, when a product or a commodity gets consumed big time, who is going to be the biggest beneficiary? The product manufacturer or the service provider, right? Here it was the stock exchanges which made big gains, and along with them the demat service providers make big strides. India's one and only listed demat service provider, CDSL, made the biggest gains as Indians took big time into stock investing. Out of the 53 million accounts that are live in our country, 30 million accounts are in CDSL's hold, and their growth was pretty fast. Their business went up 50% in the last 1 year alone. That is 2020 to 2021, business went up 50%. When a company makes big growth in its business, its stock also has big gains. CDSL profits and sales started showing growth from June 20 quarterly numbers onwards and started picking up speed from December 20 and March 2021 results. Its sales went up 40% and profits zoomed 89% for the full financial year 2021. This was supported by a big margin expansion which reached 50%. That is, for every 100 rupees of sales that CDSL makes, they make a profit of 50 rupees. One can find very few companies having such big margin expansions. When companies make big profit, their stocks rock and give big gains to its investors. CDSL had 286% growth in the last 1 year. In the same period, NSE 500 index was able to manage only 75% returns in 1 year. CDSL is a small stock in the market. How can an investor identify such investment potential in such small stocks and get into them at the right time? This is where rankings come to help, where earnings growth or profits made by the companies are ranked based on their top to bottom. CDSL came at the top 20% ranking among the list of stocks that is tracked in our market on its earnings rank in October 2020. After that, the stock qualified to become the best stock in the market to invest. At the time, CDSL stock price was less than 500 rupees. One can see in this chart from where the earnings rank picked up its speed to go above 80 in October 2020 and stayed there for the last 8 months. In this period, the stock zoomed to give near 100% returns to its investors. On stock price growth rank, CDSL was a topper even before its earnings rank qualified to come at the top. When both the rankings joined together, the stock took to a big upside. We don't say that this stock is a multi-bagger in the market, while having 100% returns in 8 months is obviously a significant growth for investment, right? So, using a stock ranking report, one can invest into the best of stocks in the market and help grow their wealth significantly at a faster pace. Let's look at the investor lineup for CDSL. It was a stock that had higher domestic institutional and retail participation even before its bull run. Only that both these groups did not participate in the big run that the stock had in the last 1 year. In fact, domestic institutions started selling the stock as the stock kept going higher and higher. Don't know the reason why domestic institutional investors missed to capitalize on the big growth potential the stock had in the last 1 year. So, who made the big gains? It is FIIs who came in at the right time from lower single digit ownership. They started accumulating the stock from September 2020 onwards. All the domestic institutional sales, if we see on this graph, we can see the drop that domestic institutional investors are doing has been accumulated by FIIs, and they made the fastest possible money in the shortest period of time, while mutual funds or probably the domestic institutional investors missed the rally. Mutual fund schemes that have significant exposure in CDSL or HDFC, Nippon, L&T, Canara Robeco on their small cap funds, and PPFAS flexi cap fund. If you had been invested in one of these funds, you would have seen the growth that this fund would have had in the last 6 to 8 months. We do not say that only CDSL contributed to the big growth these funds had. It has been one of the contributors. If the funds have good stocks in their portfolio, they will give better returns. So, using stock rank report, one can also identify mutual fund schemes which have the best ranking stocks in their portfolio and help your money have big growth in the shorter period. Here is the chart of CDSL showing the qualification and how it performed in the last 1 year. It qualified for a buy in October post its ranking, and after that for a few months it was subtle, then giving another buy as the ranking strengthened, and now it is at the peak. As long as the company is growing on its profits, stock will keep zooming and giving big profits to its investors. Is it good to buy CDSL now? Not at all. It has to correct. Stock price has to come between 725 to 640 to give another buying opportunity. Till then, investing in current price can have lesser probabilities of winning. So, invest into the best ranking stocks and grow your wealth as fast as you can. To get your copy of Stock Rank Report, join our discussion group by sending a request to the contact given in the description or at the end of the video. Thank you. Happy investing journey.